Good Friday afternoon to you. Welcome to the Jon Sanchez Show on News Talk KOH. It's a pleasure to be with you as we kick off Jason Gaunt. Happy Friday. That feels like a Monday. Does it feel like a Monday to you?
Yes, that's been the case all
Hold up.
day. I was talking to the team and I was like, I don't know, is it good to have a Friday that feels like a Monday? Better than the opposite of a Monday that feels like a Friday, which
Right,
tends to happen?
exactly. Oh my goodness. Yeah, it's definitely a strange feeling going on having
I'm
that.
gonna put it out there. I'm looking forward to just a normal 5-day week. To be
Yes,
honest
well,
with
you
you,
always do. You always complain that you hate
it's true.
holidays during the week and time off during the week. Yeah, I know. I am too. It's like it's been a long time. You think about it. You go back to Christmas, things get all messed up there, workday wise, and so on and so forth. And so, yeah, I'm with you 100% on that one. With you 100%. But yeah, it was, man, what a day of football it was yesterday to ring in the new year. And whew, man, and then you, I don't know if folks, if you all feel the same way too, those of you especially that are in business, but the downside to the beginning of a new year is you're starting with a brand new slate, right? You can look at it and go, that's a real positive. But then at the same time, you go, I've got 365 now 4 days of hard work ahead, and but hey, we're gonna have a
Especially in our
phenomenal
business, right?
Yeah.
Performance wise and all those sorts of things.
Exactly.
But yeah.
Exactly.
Today was a good day. Happy to start out
What a
day like that.
bizarre day it was.
Yeah.
You and I weren't together. I don't think you were on the show at all last week, were you? Maybe what?
I don't recall.
Yeah, I don't think so. But anyway, as I said, every single day on the show, every day was bizarre last week, right? It was like could do no good and just massive movements. And I kept teasing, it's like the algorithms do not want this market to close at a new record, by the end of the year. And yeah, we missed it a little bit. Today it looked like at the open, it's like, oh, here we go again. More of the selling. I mean, Dow plummets, NASDAQ starts to plummet, and then literally in a blink of an eye, Jason, you look up at the screen, all of a sudden you got a Dow that's up, 300 points plus. Goldman Sachs skyrocketed, Caterpillar skyrocketed, Boeing skyrocketed. And then, as you always say, Jason, the rotation going on. But yet you had some major tech names, of course, that decided that they didn't want to participate. The Microsofts, and then you get into the Salesforce and the Amazons and things. So yeah, it's as I kept telling the audience throughout last week, you don't know what direction things are going to go right now. There's so much rotation going on, right? And portfolio managers getting things lined up where they think are going to be the best sectors, et cetera, for the year. And then you go from there. So, but I don't know if our Santa Claus rally, brother, is going to come through. We only have one more day. And I don't, historically going back to what, 52, I think it was 1952, 1.3% gain in the last 5 trading days of the year, first 2 trading days of the new year. I don't think we're going to have Saint Nick visiting us. I think he's already tucked away for the remainder of the year till Christmas rolls around.
Yeah, I mean, it's always tough too on these big up years as well, right? The end of year stuff that goes on. Like I said, today felt to me like you saw people taking profit finally in a new year for tax reasons to go buy other stuff, right? You felt energy, industrials moving well today. Some of the more speculative spots that, as I mentioned, solar was doing okay. So we've been waiting for this to happen. Small caps did well. So there was a bit of it into the end of last year, and I think this is the second round of that rotation could happen this year. But you and I both know it could be tomorrow. Tech could go through the roof, or Monday, and everything else could lag. But it felt like one of those today, where
it really did.
Brand new year, I can sell some of this stuff that I've owned for a long time, and maybe start to buy other areas of the market because tech still is pretty expensive. Not to say that it can't continue to do well. I was watching, I forget, maybe it was this morning, they were saying that Tony Pasquarello over at Goldman Sachs said that last year the market was 22 times forward earnings at the beginning of the year, and all the things were out there of market's expensive and earnings growth and interest rates and inflation, and now you start this year and the S&P's at 22 times forward earnings, but the market's 8 to 16% higher last year.
Yes,
so
that's a great
revenue
point.
was good. Right now the expectations 4% earnings growth in 2026. So you could have another double-digit year this year. Told you a second ago, was looking at some of the midterm election, but also just second year of a presidential cycle stuff that we can get into a little bit later. This tends to be bumpier relative to the other 3 for all the reasons one would expect. And I think the midterms clearly is a big reason for it.
Yeah, no, there's a lot of talk about the midterms and the impact. I was talking with one of our clients New Year's Eve, I guess it was, and he's like, Trump better get his act together and really focus more so in on the middle class, i.e. the voters, or the bulk of the voters, because right now they're not feeling real happy. Yeah, maybe they're seeing their 401k a little bit higher than where it was, but for the rest of their life, as far as going to the grocery store and medical insurance and on and on and on, the essentials of life, they're frustrated. He brought up some good points that he thinks that the Trump administration is going to make some big announcements this year, to combat that fear that's out there, that frustration. I got a question I want to ask you, but first I want to tell the audience what we're going to be discussing this Friday as we wrap things up. So I'm going to throw the question out to you now and give you a little bit of chance to think about it. Do you agree with me that you are seeing, hearing, watching so many Wall Street analysts, strategists, et cetera, and I'm talking some of the ones that are respected out there, indicating a sign of optimism for 2026 that I have not seen or heard in a number of years? So that's my question to you. I want to see if you agree with me on that, because I am seeing that, and love to have that discussion with you. But first, let me tell you everybody what we have lined up for you. Of course, we're going to give you the recap as we wrapped up the full trading day of the first trading day of the year. But it is a new year, and we always like to do a show at the beginning of the year to set the table, get you pumped up, get you ready for the new year. Now, right now is a perfect time. Here we are, one trading day down. Perfect time for what Jason and I like to call a financial reset, right? I think a lot of people, this is why we have New Year's resolutions. And I saw something, I was watching one of the commercials, I think for, was it Planet Fitness, or one of the fitness companies came on during one of the football games yesterday. And it said, what is it, like 50 some odd percent or 60 some odd percent of people break their New Year's resolution by like January the 9th, right? So everybody has great intentions at the beginning of the year, but very few can follow through. But we're going to make sure you follow through on yours, right? So we're going to talk about today's theme is really going to be a financial reset. So what we're going to be talking about is this. Jason and I have created a list of 9 essential financial goals that every one of you can establish, from building real security, protecting your family, making sure your money is actually working for you, and so many other different areas. So if you want this year, 2026, to be the year that you finally take control of your finances, we're going to help you do that. So we've laid out some, again, very, very wonderful, extremely important financial goals for this year. And it's nothing that is, that's nothing that you've never heard about before, but I think it's a good time. Again, as I always tease, kind of like when a professional player goes, to training camp. Yeah, they've been playing their sport for years, but they always got to do a reset. Well, this is your financial reset. Today's the beginning of training camp for 2026, because as we'll discuss here in a little bit, the consensus on the street is this is going to be a very, very good year. So with that said, now you know our topic. Let's go back to the question, Jason. You hearing the same thing? You feeling the same thing as I am, that I think this is going to be one hell of a year?
Yeah, I mean, I would say probably just carry over from last year, almost to the sense of a bit of complacency, right? Where many analysts are just doing their 8 to 10% growth expectation on the S&P 500 type stuff. Nothing, there aren't a lot of things out there on the horizon. And this is what we've talked about all the time, is markets like this tend to get thrown offline or go down because of an unknown of some kind, right? As I've been saying over, and I know you guys have been as well. Yeah, right. Well, it's too early to throw the AI trade out the door and be like, oh, those companies are too expensive, because we haven't even gotten to the analogy I used, probably last time we talked about this, was you buy a biotech until they get their trial and they're successful, and then you sell it, because you don't really want to deal with the whole pricing and how much is a drug going to cost and how are they going to distribute or any of that stuff. You're sort of buying the excitement and selling the reality. And so right now, I still feel like we're in the buy the excitement phase. That valuation, while important long term, doesn't matter right now, because nothing's come out yet to truly give you a sense of, oh, there's no way they're going to make $1.5 trillion or whatever OpenAI's pledged to spend on all these places, because you haven't seen any of it yet. Like, my comment is that I've been keeping in the back of my brain. I think the market peaks within 3 months after OpenAI IPOs. So that's when you're looking out there on the horizon, because now the kimono's off. You've seen the biggest secret of whatever in the whole wide world, and now they have to have earnings and have revenue, and how's it all tie together? So that's probably where I'm looking at. So all that rambling on is just to lead to say that we're still too early to poke holes in the biggest industrial revolution we've seen in a long time, but there will be potholes. There will be some seasonality, right? I talked about the presidential cycle year two. Well, January tends to be a bumpy, volatile month, even into February, March, but then, tend to see the back half of the year act well. But it's the worst of the 4 years typically, because you've got the excitement of year one and then more the hangover phase of year two, all these promises and how many actually get accomplished. And then you've got the post, and we talked about the midterms. And then you've got the two, year three, year four, that tend to be more the excitement and the pomp into my party's better than that party that the markets rally on. So yeah, to your question, yes, they are confident, but I think more of a carryover from last year versus, people coming out being boo bears and saying, okay, the highs are in now, get all bearish. Until something happens that some of those guys will pivot and try to take a shot, but we'll see.
I'll give you some of the reasons I'm thinking that this is going to be an outstanding year when we come back. I think I hate to say this, but I think this time, or let's just use the term, this year could be different. There's some things that we're going to be facing this year that I think are going to be very positive. So we'll discuss that, tell you where this market finished up today. But first, let us turn it over to Kristen Snow. Happy New Year, my dear, and welcome back to the Jon Sanchez Show on News Talk 780 KOH. Happy New Year to all of you. Joined, of course, by Jason Gaunt. All right, once again, we'll be getting into our topic, New Year, New Plan, 9 financial goals that you cannot ignore for 2026. But first, let's tell you what happened in this market today. Again, it was a wild ride to get the year kicked off, but all that matters is where we finished at 1 o'clock, and that was a pretty good gain, at least on 2 out of the 3 averages. The Dow for the day up 319 points, a 0.66% gain. Closing level there was 48,382. NASDAQ down 6, S&P up 13. On the commodity side, we lost just 6 cents on oil, 57.34 a barrel. $13.30 pullback in gold, 4,329 an ounce, and up 2 basis points on the 10-year to a yield close of 419, and for the week up 5 basis points. All right, let's just real quickly, Jason, before I get back to my comments on why I think this year's going to, you want to say next year, why I think this year's going to be strong. Educate the audience a little bit about the rotation we saw today. They gave up on tech. Microsoft down $10.68. Palantir down $9.89. NVIDIA actually bucked the trend, up $2.35 as the semiconductors were strong. Intel had a nice percentage move, $6.72 increase.
Well, you never want to underestimate taxes, right? People tend to over focus on taxes, in my opinion, but certainly you don't want to underestimate it where you're in a new tax year. So instead of selling these stocks to buy energy or industrials or materials or some of these areas that you feel could benefit from some of the Trump agenda, and you want to reduce some of the exposure in some of the areas that have done so well over the last couple of years, if you just wait a couple of days and you get into 2026, now you've got a brand new year.
Right.
To have those taxes
16 months before the tax bill comes
exactly. And so very common to see some people do half of them last year and do half of them this year. And so you're seeing that rotation of consumer discretionary, communication services, tech was flattish, but energy was strong, industrials, materials, small caps, right? That rotation, which we've said ad nauseum, tends to, never last, but this time could be different. Small caps still ended the year pretty darn strong last year, but I think that's a bit of what you're seeing. International was up. Emerging markets were up over 2% last night. So another area that I bet people continue to chase after this year, non-US, just because the dollar was down 10% last year. And people think that could continue this year with a lower interest rate environment, not only just the Fed, but also pressure on the Fed from Trump. So you could see a bit of a redux of last year into this year, but some maybe different players on the leaderboard, energy being as oversold as it is, materials, utilities, especially with the AI, second round. I don't think it's going to be the builders anymore. It's going to be more the who can utilize these tools to become more successful vis-a-vis a Cat Tractor that was up today, a Goldman Sachs, et cetera.
Right. No, I agree 100% with you, 100%. So you let the cat out of the bag on one of my catalysts for why I think this year is going to be a very strong year, and that is the Fed situation, right? So just to remind everybody once again, Jerome Powell will step aside in May. We should know, according to the president, probably this month, who he is going to recommend the Senate nominate to take over Mr. Powell's spot. Bottom line, it'll be one of his persons. So we know that the mandate will be, all right, Mr. New Chairman, your job is to drive these interest rates down at whatever you need to do, drive them down, convince the rest of the FOMC, drive the rates down. So I think obviously we will be unless again, some outlier happens, we will be in a declining interest rate environment. Dwight went out on the limb the other day. He said, yeah, I think there's going to be 5 cuts at 0.25%. I'm like, well, you're way out there compared to the rest of the street. I don't know where you are. I'm 2 to 3 cuts, I think. Yeah, that's right. You said the same thing.
Most, yeah.
At the most, exactly. So that, of course, folks, is going to have one heck of an economic boom, not only for the stock market side of things, but also real estate and so on and so forth. And remember, real estate it's just, for the last couple of years, it's kind of languished, right? It's been okay, but it hasn't been great. People have been very frustrated with, what was 7% mortgages for a lot of 2024. Things obviously have come down to just slightly above 6% towards the end of last year. For 2025, things have come down a bit. Still in that, just 6.25, 6.2, right around there for the 30-year mortgage at the end of last year. We could easily see, Dwight did some calculations, we could easily see a sub-6 mortgage with maybe just 1/4 or 0.5% cut. But ultimately it is up to bond traders. Fed can cut or raise all they want, but the bond traders are going to do what they think, and that's ultimately what determines what your mortgage rate is going to be. So I'm very optimistic. I think that's going to be a major driver to some good stock market performance this year, Jay. But let's go to another one. And that is, you touched on this earlier in the show. Amazing how our minds think alike. And that is the IPOs that are expected for this year. And again, you never know what's going to happen. So let's talk about one of those, and that is SpaceX, right? I don't know about you, but I've been getting a lot of emails from our clients. Hey, what's the deal with SpaceX IPO? Can I get in on that? And so on and so forth. And obviously the word is that they will do it this year. Don't plan on being able to get in. So they're saying, between OpenAI, which we'll talk about, the parent of ChatGPT, between that and SpaceX, I don't know which one's going to be in bigger demand. Bottom line, they will both be big, and you probably will not be able to get your hands on them. That's how the game works.
And SpaceX is such an interesting one too, and you can actually get exposure to SpaceX through EchoStar, right? SATS. Mm-hmm. Remember, they sold some spectrum. I'm of the opinion the SpaceX, Starlink, all that probably reads as good company, bad stock. Right. So I'm going to throw that out there.
Why would you say that?
Just because of what are the ongoing cost structure, right? Like, what is the revenue relative to what it costs to put satellites in the sky and all that sort of stuff. And, it may not be as profitable as one thinks down the road. I'm just going to, play devil's advocate.
I'm going to counteract you for just a second.
Sure.
Okay, I'm just bringing up a report, and I did not get a chance to read it.
It's a company doesn't mean it's a good stock.
Oh, yeah. No. I agree. But here's something. Yeah, exactly. As we'll touch on, they missed their numbers today as far as car deliveries, and no one really cared all that much. But I got an email because I am a Starlink user and multiple accounts. Yep, you too. And I got a report. I don't know if you got it. It's called the 2025 Progress Report, coming right from Starlink. Let me just read you the header of the body of the email without getting into the report. But it says, Starlink exists for our customers. We're constantly inspired by how to use Starlink to work, learn, explore, and stay connected, often in places where reliable internet was never possible before. In 2025, the Starlink network grew by 9.25 million active customers across 155 plus countries, markets, and territories. That scale continues to push us to improve reliability, expand coverage, and further enhance our hardware, software services, and support. Today, we're sharing with you our 2025 Progress Report, which highlights how Starlink has evolved over the past year. The future has never been more exciting. Thank you for trusting us, et cetera, et cetera. So I've never seen them do this. I've been a Starlink customer for, I think, 3 years now. I've never seen them do this. And you and I both know why they're doing this, Jason.
Right.
Pre-IPO.
Yes. Right.
Pre-IPO.
And again, the Elon Musk hype clearly could blow a hole in what I'm saying. But again, I'm looking at it probably more like I think of Tesla. Like, if it was valued like General Motors or Ford or any of those types of things, it would be, a fifth at the most of where it trades, right? And so same thing with this. But I view these things no different than I would view Comcast or AT&T or Verizon or any commoditized
Well, there's so much more excitement. They have no competition. Who is their competitor?
But then what is he going to just play Monopoly and jack prices on people? Or
You got it. That's what they've done. That's what they've done. But at the same time, you have no choice. And I think, again, I'm talking as a user, I could not live without Starlink, right? It is essential to my life and to our business. We'll use Corey as an example, right? Corey spends a lot of time at soccer practices with his son. And I said, Corey, this is off air. I said, Corey, buy the new Starlink Mini. And so he goes out and he buys for $225. I think he said it cost him $50 a month. And when he's at a parking lot with his son for soccer practice, when he's doing the show, plops it up on the roof and sounds like he's in studio, right? That's what attracts me to this is they've gone after all segments of the market, which very few businesses can do. From the guy that wants to pay $50 or the guy like me that pays $2,100 a month.
right, a lot. Yeah.
A lot. So yeah, I think to your point, I think it's very, very exciting. But again, we know that Amazon and a few other companies in China, they're trying to do this. But I think he is so far, meaning Starlink and Elon Musk is so far ahead of everybody. I don't know how anybody will ever catch them.
Yeah, it's like the Tesla experience, right? They were so far ahead on EV.
Very much so.
Yeah.
Right.
Again, it'll be interesting to see how profitable the business is, right? Versus
that will be the interesting portion.
How do you switch out the old stuff to the new? Like, maybe those rockets go get it and bring it back. We'll see.
Yeah, we'll see. But I'll tell you, when I'm over on the Southern California coast, I just see those babies go over those rockets from Vandenberg Air Force Base all the time. And it's amazing that people. It's kind of become a party. It's like because they announce when they're going to launch the rockets, and like, hey, let's get together at 6:00 tonight and watch the Starlink rocket go. All right, cool.
Bring pizza.
Yeah, we'll bring pizza and beer. Exactly. So, anyways, I'm excited about that. But the last thing I was throwing is and maybe we chat about this when we come back. The OpenAI IPO next year. I think that's, again, going to be amazing. All right, let's turn it over to Jack Saban. He's got news, traffic, and weather. Hey, Jack, welcome back to the Jon Sanchez Show on News Talk 780 KOH with Jason Gaunt. All right, once again, we finished up with a gain of 319 on the Dow, lost 6 on the NASDAQ, and a 13-point rise on the S&P 500. All right, before we get to our topic, 9 important financial goals for this year. Let's talk a little, again, we're talking catalyst for this year, lower interest rates because of a new Fed chair, so on and so forth. There's many other catalysts, but we don't have time to go through all of them. But let's talk the OpenAI IPO that's anticipated.
Yeah, so I'll play the bear. Because of the valuation part, or now you'll get more look through into their business. But the other part with IPOs, remember, is it's a zero-sum game in most cases. That in order to go buy OpenAI stock, you have to sell other stuff. Right? You have to go sell your Microsoft or sell some Google or sell some SPY or sell some whatever. Mm-hmm. Yes, you could take it out of your savings account, but
you're talking on the institutional
cases, people already are invested in the market with what they're spending. They're not like, I've been waiting around in that savings account for OpenAI to come out. Right? So it tends to create a vacuum out of other big market cap things into smaller items or into IPOs that haven't yet been added to the S&P. Because remember, you don't get added to the S&P, 3 days later, right? It's a period of time before that happens, and so that can create vacuums inside of the market. So that's why IPOs tend to be almost a concerning thing. Not that they don't create excitement, but they do create liquidity vacuums out of the big guys into other spots.
But on the flip side, we've had numerous instances over the years where we've had a hot IPO and it actually does the opposite. It turns into a catalyst for the rest of the market.
Sure. No, it definitely can. And then educational, people look at other places that can benefit, or they didn't get on the IPO. So that, just the incremental buying can create excitement around it. But historically, when you go back and look at high IPO periods, like anybody. We've talked about this before, private credit, where you and I have talked a bunch. These big credit funds, first they invest in all this stuff internally, and then they bring it out to their really high net worth, clients, and then guess what? You can have it in your 401k, right?
Yeah, that's right. You get the crumbs.
We ran out of money of people who want to buy. Now it's you. Well, think of OpenAI and all these other companies. They've had so many rounds of these coconuts on TV that are like, I'm at Altimeter or whatever place that I'm a big, smart hedge fund guy, and I've been invested since it was this small, and now it's really big. Now we're going to give it to all of you, right? Like they've made all the money. And this angel investing and things has been so much more prominent, I would say, this round than any other time in my career, where all of these private equity funds all have pieces of this and that and this and the other, that they've soaked a lot of the big wins out. And now it's just onto retail to prop it up as they start to exit. So that wasn't the case back when you and I were starting out. Like companies got seeded by banks and then they IPO'd. They don't really have to do that anymore. They wait longer and longer and longer to the point that they've kind of gotten all the money out of these big investors and now they sort of come to us. So just something to keep an eye on. Again, not to say that it's a bad thing, but I think the cycle may be a little bit different this time than it was in the past.
Yeah. Yeah, it'll be interesting. All I know is it's highly anticipated. Whenever you get a highly anticipated IPO or IPOs, which it should be because there's a list of others also, it can create an optimism in the market, right? So yeah, time will tell. But better than having the dry spell that we just got to going through for the last couple of years. Or what was it, 2023? I don't think there are any.
Sucked it all out, right? SPACs,
oh yeah,
remember that?
Great old SPAC. That was just a great thing. Yeah, poor people got involved in. Goodness. All right, let's get back to you. 9 important financial goals for the year. We're going to hustle through these. First point I'm going to take, build or strengthen your emergency fund. Now, we all know when we talk about this, Wall Street says to tell you 3 to 6 months of living expenses, liquid, accessible cash. Our theory, of course, is whatever you're comfortable with. It may be 1 month, it may be 12 months, it may be 14 months. A lot of it depends upon how you were brought up, looking at money, the stability of your job, your business, so on and so forth. But again, this is your first line of defense against going and having to tap the credit cards or going and taking a personal loan, that type of thing. Start today. Look at your emergency funds. Make sure they're liquid. It's not a return on the capital. It's a return of the capital when we're investing for emergency funds, CDs, money markets, very safe things. What's your personal comfort level? And if you have a spouse or significant other in your life, please consult with he or she because you can have different ideas as far as what that comfort level is. There's your first point for 2026. Get that emergency fund strengthened up. Go to number 2.
Cash flow, right? Creating a cash flow plan, understanding what your expenses are. We've got some great software we've been working on onboarding internally. We're rolling out to clients now, but give you the ability, you can pull in your credit card data, it'll analyze it, it'll give you a sense of where spending is. That's the thing that's the most important for folks. They say, oh, well, I have a credit card and I spend $3,000 a month on it. Well, what's in it? What do you spend it on, right? What is a need, want, and wish? And so knowing what your cash flow looks like helps solve a lot of the anxiety that a lot of folks have. They just don't understand, how am I going to retire? How am I going to get there? Starting with what you spend on is a great place to look at. So monthly cash flow plan is huge.
Love it. Number 3, very few times can Jason and I say we guarantee something, right? Compliance is not like that. But I'm going to tell you, I'm going to give you something that is guaranteed. If you pay off a high interest debt, that is guaranteed that you are getting a return on your money. So as an example, let's say you got a credit card that's paying you 20%. You pay that off, you just made 20% on your money because that debt is gone, right? You got to reverse engineer this. And a lot of people don't do that. We get into this a lot when we're doing cash flow planning for our clients and when they're getting ready for retirement. Again, it so amazes me, Jason, as much as we talk about this, someone will have, I'll just pick a hypothetical, say $10,000 in credit card debt. And let's say they're paying whatever, $1,000 a month, right? They're paying maybe a little bit more than the minimum. They're paying 15, 20, 25% interest. I mean, that is not uncommon at all these days, even for someone with very good credit. Well, if you're making, let's say it's a good year, you're making 10, 12% in your investments, or worse yet, you've got money sitting in a money market account or a savings account making you maybe 1%, 2%. It doesn't take a genius to say, all right, if I'm only making 1 or 2% and I'm spending 25%, how to pay it off. So get rid of the debt. It's a guaranteed return on your money by eliminating that debt. Again, a good rule of thumb, if you've got multiple credit cards, start with the one with the lowest balance, get it paid off, not because that's going to have the biggest impact. Back to Jason's point of cash flow, it's a psychological game. If you have multiple credit cards, psychologically, get rid of the smallest one. Yeah, it'll save you a few bucks a month. But then whatever you were paying on that small one, maybe it was $50 a month, take that $50 and apply it towards the second smallest one. And then work your way up. And before you know it, you've got 3 out of the 4 credit cards paid off. And all those payments for those first 4 credit cards were, $500 a month. Now you're dumping that $500 plus whatever you were before on the higher balance one. So again, it's a psychological game that you're accomplishing something. It's a great way to get your momentum going in 2026.
Retirement contributions is the next one. like we say all the time, I'm just doing arbitrage, right? What is the best place to put an investment for the best return you can get, right? And you're only able to allocate so much of your assets into retirement or qualified accounts, IRAs, Ks, Roth, right? So doing the work to best understand, if I have X amount of dollars, what's the best place for me to put it? It isn't the same for each person. If you're in a high tax bracket, maybe you want things that can make your income go down. Maybe you're someone who has a lot of IRA balances now, looking at maybe conversions or looking at investing in Roth IRAs to try to mitigate some of the tax burden through required minimum distributions later. But ultimately, maximizing the contributions to your 401k where there's matching. You talk about free money. That's also free money, right? Even if you're scared to death of the stock market, in 99.99% of the time, you can put your money in a money market account and your
within the
employer
401k
is matching and in your 401k. And if it's 4% and you put 4% in, though you're completely in a money market account that doesn't have the stock market exposure and they're matching you, you've doubled your money, right? So wonderful rate of return. Make sure that you're taking advantage of that type of free money. But retirement contributions are very, very important.
Again, we'll be doing more shows as we get closer to tax time on contribution limits, but we did get some changes just very quickly before we go to break. Let's run through these very fast for you. We'll go 2025, 2026. So IRAs, 2025, you could put in $7,000 if you're under age 50. This year, you can now put in $7,500. Or 50 years old or higher, the catch-up, you get to add $1,000 for last year at $1,100. So again, for this year, if you're over 50, you can put in $8,600 into your traditional or Roth IRA. 401k, we got a little bit of a bump up here also. Last year, you could put in $23,500 under age 50. This year, you can put in $24,500, age 50 or 50 to 59. Last year, you could do a $7,500 catch-up. This year, you can do $8,000. But don't forget, folks, for those of you 60 to 63, you're in my age group, we get to put in $11,250, not the $7,500 or the $8,000. That is a significant catch-up. But as Jason and as I teased on New Year's or day before New Year's Eve, you and I are going to be, or our firm, we're going to be launching a lot of phenomenal new services and products this year. We will go through this in more detail. But if you think these contribution limits are high, wait till you learn some of the things that we're going to be able to share with you and some programs that we're going to be launching. Because, folks, let me tell you, Wall Street doesn't tell you the whole truth as far as what you really can shelter pre-tax in some of these retirement accounts. So we're excited about that one. We'll give you, like I said, more details. But there's just, right off the bat, some ways to sock away a little bit of money, lower that tax bill. So maximize those contributions into the account. When we come back, we'll run through points 5, 6, 7, 8, 9 very fast. But first, let's turn it over to Kristen Snow right now at Traffic Center. Hello, Kristen. Back to the Jon Sanchez Show on News Talk 780. I think this is, again, a great way to kick off the year, refreshing your memory, getting you fired up, 9 financial goals that you cannot ignore this year. And we've gone through 4 of them. Let's go to number 5. Review and rebalance your investment portfolio. Fire away, my friend.
Yeah, I mean, like I said, that's what people are doing now. Looking at what worked last year doesn't necessarily mean it's going to be the same thing that could work this year. If you've got taxable accounts, maybe there's some names that are in there that are down, and you want to take some losses on them to do some loss harvesting and reposition those portfolios for
wait, it's the
other
new
gainers.
year. Why would I do that?
Well, it's early. And
there you
also
go. Never too late for tax.
The wash sale rules, right? Where you have to make sure you don't buy that thing back for 31 days. So you don't eliminate that loss that you've harvested. But there's, you always want to take a fresh look. Doesn't mean you have to change anything, but it just means it's always good to review. And like you said, if you have a simple portfolio that you built 70% stocks, 30% bonds at the beginning of the year, equities outperform. So you could be 75-25 more risk than you thought you had before, and you can reallocate that back to target.
There you go.
Just some of the things to pay attention to.
And again, this applies to those of you that not just have a 401k, but have a 401k all by itself, or maybe you have a 401k and other investment accounts. people always tend to forget when they do rebalancing to take a look at the 401k. For most of you, that's going to be your largest chunk of money. So you need to put some attention into that, and don't hesitate to do that rebalancing. Obviously, there's no tax consequences whatsoever there. All right, here's something near and dear to all of our hearts. Point number 6, establish and update an estate plan. Wills, trusts, powers of attorney, healthcare directives, you name it, it's all part of estate planning. And this is something that you must be doing immediately if you do not have an estate plan. This will be a new program again that we will be launching. We'll give you more details here in a few weeks. But again, the purpose of the estate plan, you don't want to be rich. You don't need to be rich. You don't have to be rich to have an estate plan. If you have kids, if you want to avoid probate or have your estate avoid probate, that's where you need to start talking about a proper estate plan. And folks, wait till you hear what we are going to be able to do to help you out about this.
Yeah,
but it is critical. This is a great time also to revisit your beneficiaries, right? Take a look at your 401ks, your life insurance, your IRAs, things where you can name beneficiaries. Make sure you got the people in there that you want, right? Especially if you went through a divorce last year. A lot of times people forget to kick the spouse off if they don't have to leave it under the divorce decree. So great time to check your beneficiaries. Number 7, Jay.
Life insurance, disability insurance, umbrella policies, all the things that are asset protectors, right? Maybe your assets went up 15% last year and your insurance or umbrella policy doesn't look like it went up last year, right? So just take a review of what your assets look like. Make sure that you've got proper insurance in place. Life insurance, always very important to look at. What if something happened to you? What if something happened to a spouse, income-wise? What would need to be replaced? These are always good times to start thinking about that, because we always tend to kick it down the line. We'll get to that. We'll get to that. Well, now's a good time to think about it.
Tell them real quickly about the homestead exemption, not insurance, but it falls into the asset protection category.
Yeah, you can go down to your favorite spot where you register your house deed, and you can file that homestead exemption. At least it ring fences some of your assets, depending on where you're at, for bankruptcy protection, etc.
Creditor protection. Yep. North of 600,000 protection for you here in Nevada. All right, let's go to number 8. Set a tax reduction strategy. Well, you better believe that. Proactive tax planning beats reactive tax planning, right? Way too many people. Hopefully you were doing this. You heeded our advice. You were doing this going into the end of the year. If not, it's not too late. There's still some things you can do, especially if you are a business owner. There are many, many retirement plans that can still be established this year for last year, where you can shelter money on a pre-tax basis, get tax-deferred growth, so on and so forth. Remember, it's not a matter of what you make, it's a matter of what you keep. Wrap us up on number 9, my friend.
I think the financial strategy review, this is something that can be done with an advisor, or if you've been doing it yourself, really looking at all these things, right? What's the goals? What's the timeline, your risks, opportunities? And successful people don't do it alone, right? This is where you hire folks to help you. And if we can be of help, obviously, please don't hesitate to reach out or set up an appointment with the advisor if you currently have one.
Absolutely. And I know many of you are starting to look at, AI to help you in your financial planning strategies and so on and so forth. Hey, more power to you. It is amazing what it can do. We all know that. But keep in mind, there is a value, and I'm not saying this to be biased because we are one. There is a bias that we have towards using professionals, whether it's a financial advisor, CPA, attorney, whatever the case is. One thing AI cannot do, it's not a human. It doesn't have emotions. It doesn't give you sound judgment. And what we have found, and what you're going to hear from us many times as a theme in this year and definitely going forward, is the best world that we think right now is combining, not one or the other, but combining human professionalism and experience with technology, meaning AI. Folks, that is a powerful combination, and you will find that at Sanchez Gaunt Capital Management. Thanks for joining us. Have a great weekend, and we'll come back hitting it hard on Monday. God bless. Have a great weekend. We'll see you, Jay.
Jon Sanchez is a registered investment advisor, and the opinions expressed by Sanchez Gaunt Capital Management, LLC on this show are their own and do not reflect the opinions of News Talk 780 or its parent company, Cumulus Media. All statements and opinions expressed are based upon information considered reliable, although it should not be relied upon as such. Any statements or opinions are subject to change without notice. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk and, unless otherwise stated, are not guaranteed. Information expressed does not take into account your specific situation or objectives and is not intended as recommendations appropriate for any individual. Listeners are encouraged to seek advice from a qualified tax, legal, or investment advisor to determine whether any information presented may be suitable for their specific situation. Past performance is not indicative of future performance.